Okay, hello everybody. Hi, this is me, Larson Chatskas from Easy Markets, and this is a quick daily Pitch International breaking news event. But the breaking news is going to be more actually about the fact that the indices, the U.S. top indices, have reached some of them have reached the all-time high. So I want to pick up on that one. Basically, it's going to be a little bit more from the technical perspective. But I'll pick up on a few fundamental things here and there. Now, before we jump into all that, we need to quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. But basically, yes, like I said, I wanted to pick up on the fact that yesterday the Dow, the S&P, did rally like nicely, and yes, but like I said, I'll jump into the charts in a bit. Also, just before we do that, quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, Dow Jones Industrial Average, ladies and gentlemen. So, beautiful rally yesterday. Amazing here. And what can I say? Great stuff. Great stuff. Cleared this barrier. Look, I talked about this already in my morning webinar, which you can always go and check it out. There's a recording of it on YouTube or on our channel. So yes, please do like and subscribe because again, in order not to miss out on those. Yes, look, I spoke about this today and also this week. I've mentioned that look, we are at a very interesting spot here. This barrier, the 41,000 kind of 700-ish zone, the highlighted one. We were clearing it on Monday, on Tuesday, but then we were struggling. So then I said to you that before the Fed, I said, look, keep your eyes on it because if this is going to pop above it and stay above it, then yes, great, we could see further action to the upside. Also, I have to admit that with the Fed, I was kind of expecting a 25 basis point cut actually, but hey, we all sometimes get it wrong. So but okay, it came out with the 50. I was also examining this scenario in one of my short videos that if the 50% cut comes out, I mean, why it could be seen as a negative, but still the market rallied as you can see here. I mean, yesterday we just saw, like there we go, boom. By the way, I'm looking at the futures, not the cash. I'm looking at the futures, so but you can relate that to the cash as well. Look, again, coming back to the whole idea, the whole situation with the Fed, the fact that they've cut by 50 basis points, yes, that's great, interesting. I mean, they're trying to stimulate the market, but like I said, I'm still a little bit, I wouldn't say skeptical, but I'm careful. I'm always careful. I'm trying to be careful because look, we had a great rally in general today. Today's Friday. We could see a continuation move further north, and but that's why I have this 42,583 here on my chart as the barrier, as the gateway to the upside. And that's only from here. From where I will kind of consider some higher levels. At the moment, I'm just observing the price action, and also I just wanted to say that look, one thing that for sure worked out is the fact that the S&P reached an all-time high as well. And I said this in my previous breaking news webinar, not webinar, video. That and actually in my previous webinars as well, which I said that if Dow was hitting the new and was going for these new all-time highs, the S&P was kind of lagging a little bit. And previously, I just removed it today, and during my webinar, I just removed it. I had this downside line, which was a good line, a good indication here. But we cleared it. Wonderful. This is what I said from where I will consider some higher levels. Wonderful. We cleared it. I said then that we could go for a new all-time high just because like I said, the Dow and the S&P do like to play these catch-up games. If it's the S&P who's hitting the all-time high first, then the Dow will eventually hit it as well. If Dow is the one who's hitting the all-time high, then S&P. So both of them, there we go. The S&P managed to catch up, hit the all-time high yesterday. Fantastic. What's next? Basically, I am, like I said, because I am on the careful side, and because I am I am who I am, basically, and I'm always like, trying to find when it's too good to be true, then it's too good to be true. In general, everybody was thinking that the September will be a little bit on the negative side, and like statistically, September used to be a more negative kind of, and still is sometimes more negative month. But looking at this picture here, I mean, okay, apologies for the cramped up lines here and every arrows, but you can see that yes, it's another green candle. It's another strong move here to the upside. Last year in September, we had a move to the downside here. Then in 2022 September, yes, down. 2021, 2021, what happened? September, down. Then the 20th, the year 2020, September, down. Only in 2019 that again the September was in positive territory. So since 2019, we have not seen a September in positive territory. Look, we still have a full week to go through next week in September, so I'm not rushing into things yet because again, if by any chance this, let's say, starts reversing back down and let's say falls on the S&P here, it falls back below the 5,721 zone, somewhere around here. Look, I will kind of treat it a little bit as a bearish signal because maybe on the monthly we'll see a nice well, actually on the monthly I would need to see this one dropping all the way back to 5,600, something like that. Let me just double check here. 5,660, that would be enough. I think it's this one right there. There we go. If it starts falling below this little hurdle here and stays below this area by the end of this month, we'll have ourselves a nice little possible reversal candle here if we're purely looking at the technicals. We'll see ourselves a nice little doji, no, not sorry, not a doji, like a hammer, like a pin bar. And that then that could actually spark some interest among the bears. So let's not rush into things. I'm still, like I said, I'm still being careful here. And one of the ideas that I talked about during my webinar today, that look, we great rally, wonderful, everybody's now like getting bullish and everything, like great, we have the Fed cuts, but maybe this bearishness, this kind of this fear of this bigger cut in rates, which I described previously, maybe this could kick in a little bit later. So again, I know that I sound now very I now I'm like I sound like I'm trying to get myself out, like from drowning, but no, the thing is that okay, look, I got it wrong in terms of the idea that we could see a sell-off straight away, or like not a sell-off but a decline straight away. But now when I'm looking at this, okay, look, let's see, again, this is just an idea. Let's see if the higher higher, the 50 basis point cut will like bring the fear a little bit later. I don't know. Again, for me, like I said, at this point, I'm watching this carefully. If we start clearing the 5,797 territory or the 5,800, okay, great. Let's go higher. Like, let's go and aim for that 5,850, 900, or maybe even 6,000. Who knows? Actually, could be an interesting moment. So then we can scrap the whole downside scenario idea. But if it starts suddenly, let's say, dropping back below the 5,721 zone right here, and let's say that happens today, then on a weekly chart, we'll have ourselves a nice little false breakout here, and maybe this could actually spook the bulls from the field a little bit in favor of the bears. Again, a lot of theories. I know a lot of theories, but I'm trying to find some sort of logic. And at the moment, I think that everybody's kind of, trying to find it somewhere, and everybody's stuck. So whenever, let's say we're cleared from big fundamental news, fundamental and big data, big fundamental analysis here. I mean, we're still keeping an eye on it, of course, but we're cleared from the big data events. So now if whenever, let's say, we don't know what to do, we can refer to the technicals, and technicals do work, and for me they do. I'm a technician, so market technician. So yes, so I'm looking at the technicals right now, and like I said, for me, it's quite clear. If we start clearing some of the barriers, then I'll kind of adjust my analysis towards that, and I'll adjust my analysis then, because at this point, like I said, if we do push back above the, or not, sorry, not back above, if we do push above the 5,800 territory somewhere around here on the futures, yes, this is opening the door towards higher levels. But if we, let's say today, we drop back below the 5,721 zone, which is the previous all-time high, maybe we'll get ourselves something a little bit more bearish. And the reason for that is that we could see a nice false breakout here on the weekly candle, and maybe that could, would be enough to push the stock market back down. The same, like I said, this is what I'm also keeping an eye on the Dow. The same story, 42,580 zone here. If we clear it, I'm going further north. But if we start dropping, let's say somewhere back below the 41,700 territory, now that's where it could be quite interesting. And because on the weekly chart we can see here, that's where it could be interesting, and we could see a nice, drift back down. That would be radical, but hey, it's Friday. Sometimes we get this on Fridays. And of course, the Nasdaq here, the situation is we're near my key resistance around the 20,000 zone. We're just a little bit above that. But again, if we somehow drop back down below the 20,000 zone today and stay below it, maybe we're kind of looking for a bit of a retracement back down here, back to my EMAs here, the 45-day, maybe the 100-day. And then we'll go from there, because maybe we'll start forming something of an ascending triangle, basically trying to leave this one for later. So as you know, according to all the TA rules, technical analysis rules, ascending triangles tend to break to the upside. However, I've seen this happening in the opposite direction. So hey, do not rush into anything yet. So for now, looking, long story short, if we continue to trade above the 20,000 zone, yes, I'm leaning towards some slightly higher levels, maybe towards this 20,330 zone, 37 zone here's ish, and then we'll go from there. So, ladies and gentlemen, that was just a quick technical piece here on the three top US indices. Hopefully that makes a little bit of sense. I don't know. Like I said, let me know in the comments what you think. Also, don't forget to like, subscribe, the usual YouTube thing that everybody says. But yes, that that helps me out, of course, the first thing. And yep, that means that I can continue doing these little short videos, this video throw-ins for you. So let me know what you think. Like I said, leave a comment in the comment box. And also, by the way, if you wish to for me to look into something else, let me know in the comments as well. I'll try to pick up on that, and we'll go from there. So have a beautiful trading day today, ladies and gentlemen. Have a wonderful weekend, and I'll see you next week. Bye-bye.